Happy February. We have now passed through January 2018 and we'll take a look at the overall housing market in Harrisonburg and Rockingham County. This is Scott Rogers, Associate Broker with Funkhauser Real Estate Group. Taking a look at January sales, we'll first notice that there were 61 home sales in January 2018, which was an 11.59% decline from the 69 sales we saw last January. So the 61 sales this January was slower than the past 2 years. When we look at the annual pace of sales, we'll see here that there have been 1,252 home sales over the past year, which is a 4.79% decline over the previous 12 months. So home sales are slowing slightly as compared to a year ago. Home sales prices, however, are on the rise. There has been a 4.11% increase in the median sales price from $192,000 up to $199,882. So we're nearing that $200,000 mark for an annualized median sales price in Harrisonburg and Rockingham County. Homes are selling more quickly as well, so the median sales price has been, the median days on market has been 33 days when we look at the last 12 months as compared to 49 a year prior, 55 before that, and 66 before that. So an ever increasing speed of home sales in this area. Looking at the city versus the county, we continue to see that there are about twice as many home sales that happen in a year in the county as compared to the city, but we also see a higher median sales price, around $210,000 in the county as compared to $175,000 in the city. But homes sell more quickly in the city. So the median days on market in the city is 20 days and 41 in the county. So definitely some differences in the city versus county properties. This is the graph we'll be looking at all year long to see what we're looking at on a monthly basis. The 61 home sales seen in January was putting it right in the middle of the pack as to the previous 3 Januaries. And we're likely to see a similar amount, 60, 70 home sales in February. Looking at a slightly longer picture here, you'll note that 2016 was a significant jump in home sales as compared to previous years. And then we saw a decline in 2017. So I think we're likely to see somewhere in the same range of home sales as last year, but given lower inventory levels, we might see a decline again in 2018, which we did see so far in January, but that's 1 month of data, so it's hard to know so far. This is looking at rolling 12-month windows in time. So we can see that there has been a general uptick in the number of home sales over the past several years, but then a slight slowdown over the past 6 months. And then as far as the median sales price, it was stable for quite a while around that 185 mark. And then over the past year and a half, it's been steadily climbing and is now almost to $200,000. Looking at the overall state of the housing market, we'll see an overall increase from about 800 home sales per year back in 2010 up to 12 to 1,300 home sales over the past 2 years. And then over the past 6 years, we also see this median sales price increasing. This is all single-family homes, townhomes, duplexes, condos. This is all residential properties in Harrisonburg and Rockingham County. If we break it down to just single-family homes, which can sometimes be a truer indicator of market values because it takes, for the most part, investment properties and the number of investors in the market out of the mix, we'll see that there has been a steady increase in sales prices of single-family homes over the past few years. So 5%, 7%, 5%. Even though there was a 9% decline in the number of homes that sold, single-family homes that sold last year. When we look only at attached homes, duplexes, townhomes, condos, steady increases in the number of these that are selling per year, even including last year. A little bit less clear of a picture in the median sales price. So there was a 7% increase in the median sales price in 2017 after a couple of years of relatively static median sales prices. This is comparing the number of sellers in the market to the number of buyers in the market. And so you can see a steady decline in the number of sellers in the market. 372 is the average amount of homes that have been on the market over the past year, and a steady increase in the number of buyers in the market, although a slight decline over the past 6 months. Many folks consider a 6-month supply of homes for sale to be a balanced market, and if that's the case, we saw that in mid-2016. Prior to that, we had a buyer's market. After that, we've had a seller's market. Median price per square foot has certainly been increasing over the past 6 years. We topped out at about around $127, $129 a square foot for single-family homes back at the peak of the market, dropped all the way back down to $101 a square foot, and has been steadily increasing since that time. And that generally tracks with median sales price. Flipping ahead here, this is an interesting one. So the median list price to sales price ratio. So back at the peak of the market, sellers were attaining an a median of 99% of their list price. So very little negotiating was taking place on price back in 2004, 2005, 2006. That declined all the way down to the slowest part of the market in 2010 and 2011. We saw that there was a median of 4% that was coming off of the last list price, so more negotiability in price. That's been steadily increasing. The past 2 years, it's been at 98%, and then with only 1 month of data in hand, we're at 99% this year. So time will tell if that will hold, but it certainly makes sense that as the market has been recovering, sellers are finding themselves needing to negotiate less on price. Let's see here. Single-family homes, new construction single-family homes have been selling more frequently over the past 2 years, above 75 of these homes selling for each of the past 2 years, after around 50 per year or lower than that during the previous 6 years. So a good uptick in the number of single-family homes. I do think, though, with increasing home sales, so increasing buyer demand and lower inventory levels, we need to see more single-family homes, new single-family homes being built to meet that buyer demand. This is an encouraging bit of news. So there were 85 contracts that came together in January 2018, and that is well above the past 3 Januaries. So we are likely to see strong closings, strong home sales in February and March of this year based on the high level of buyer activity. So despite a decline in the number of homes that sold in January, there was a pretty significant increase in the number of homes that went under contract during that time frame. Inventory levels are dropping. We've known that for some time. Currently 279 homes on the market, which is a 24% decline from where we were a year ago, and an even more significant decline from a year prior to that. So home buyers are finding fewer and fewer options on the market. There has been both a decline in single-family homes, an 18%, as well as a 43% decline in these townhomes, duplexes, and condos, so a more significant decline there. But in both property types, we're seeing declines. We're also seeing declines both in the city and county. Not a significant difference, but a slightly larger decline in the city, 33%, than in the county. Days on market, homes are selling with a median days on market of 33 days. Pretty remarkably here, 47% of homes that sell are going under contract in the first 30 days they're on the market. So some pretty strong home sales and fast home sales that we've seen recently. Home sales by price range. Here we're seeing some differences as we look at different price ranges in the city and county. And so there's been a 14% year-over-year decline in the number of homes that have sold under $200,000. So around 51 of these homes are selling per month now, as compared to 60 homes per month a year ago. Part of this decline, perhaps this is due to 2 things. 1, there are fewer homes for sale, so inventory levels are dropping. But 2, as prices rise, fewer homes fit into this under $200,000 price range. So a decline under $200,000 as far as the number of homes selling per month, relatively steady increase in $200,000 to $300,000, and that might be some of these home sales slipping down into this next category. If we look at inventory levels, this is a little bit of a complicated one here, but overall what we're seeing is a 35% decline in $200,000 and lower homes for sale. So that blue line shows you the number of homes that are for sale under 200,000 in the city and county, and that's been steadily declining. The yellow line is that next price range, 2 to 300,000, and that has certainly been declining 27% year over year, but not as drastically. The $400,000 price range is steady, no change in the number of homes homes for sale, and then a more significant 16% decline in the $300,000 to $400,000 price range. Few more things here. So this is looking at the number of months of housing supply, and so this is showing us that it would take 9 months to sell out of the $400,000 plus price range. So based on the number of homes that are for sale and how many of these homes sell per month, there are 9 months of homes for sale right now. That's as compared to the under $200,000 price range, where only 2 months of homes are for sale. So significant differences as far as the supply of homes that are available. Lots are selling more quickly now. So over the past 5 years, building lots of less than an acre, around 80 or so of those have sold per year over the past 5 years, which is an increase over the previous years, although obviously a drastic decline from the peak of the market when many lots were selling. There are a few other land and lot statistics in here which you can take a look at. Trustee sales, so we're seeing a steady increase in home sales and a steady decline, though a slow decline, in the number of foreclosures in this area, which is generally a sign of a healthy market. Finally, the mortgage interest rates have over the past 3 years mostly stayed under 4%. So in the beginning of 2017, they were at or just above 4%, and then spent most of 2017 below 4%. Of note, they are increasing again. So at the end of January, they were back at 4.15% and are likely going to be increasing a bit more as we continue through this year. The unemployment rate in Harrisonburg and Rockingham County continues to be quite low, marking 3% in December 2017, which is the lowest rate on record over the past 3 years. And certainly low interest rates and low unemployment rates help the overall housing market. That's it for now. You can find this entire report with full commentary at harrisonburghousingmarket.com, or feel free to visit my blog, harrisonburghousingtoday.com, where you'll see ongoing commentary and market analysis as to the Harrisonburg and Rockingham County market area. Again, this is Scott Rogers with Funkhauser Real Estate Group, and hope your February goes well.